Good morning, team. Yeah, we had a bit of fun overnight. A couple of things I want to talk about. First one is the UK is doing well. Um, Surprisingly, there's a positive data, and so the pound rallied. And I was only talking, this time yesterday that I didn't see any good data coming out of the UK to warrant the strength in the pound. Now I do. We're seeing strong job numbers and average earnings, which would suggest that the BOE will have to raise interest rates. Now, that's not really great for their stock market, but it's good for their currency, particularly if the Fed are not going to raise interest rates. So you've got that interest rate differential issue supporting the pounds, particularly the cable, which the cable is obviously the pound versus the US. So there's that happened overnight. Um, I'll come back to China, but obviously the U.S. inflation numbers were weaker, which would support the Fed not moving interest rates overnight, and so as you would expect, stocks loved that, right? And stocks took off. However, bonds did not, right? You would expect that bonds would weaken, but here we have the short end, 2 years, initially did weaken, but then took off. And we look at the 10-year, also initially weakened, but then took off. So what's happening there? Why are interest rate yields rising if the Fed's going to pause? Um, Throwing into that mix, Aunty Janet, who used to be the head of the Fed, is now the Secretary of Treasury at the US government, was at the Senate committee and was mentioning that the dollar dominance is waning and is expected to continue to weaken as a reserve currency, particularly after sanctions on Russia and Iran have forced those countries to look for other ways to pay for goods, such as using gold or oil to pay for the goods that they need, which is weakening the requirement for the US dollar, um, you know, in the central banks to pay for goods. And so the US dollar as a reserve currency weakening. Europe and particularly France are also not happy having to continue to buy US dollars and are looking for other avenues. So that's an interesting development, and we'll keep an eye on that as it goes. Coming back to China, I mentioned that we're looking at some key data coming out on Thursday for them, and that would designate how much stimulus that they were going to put into the market, particularly the real estate industry that has been weakening, and the growth of their economy has been weakening. Well, overnight, after the new loans came out, which is subpar for them, and a weaker number, China cut interest rates. Now, you might not have heard about this, and the reason being it was only 10 basis points, right? So it's gone from 2% to 1.9. So lowered a short-term lending rate, but it was the first move in 10 months, right? And trying to stall the post-pandemic recovery in the world's second largest economy. Um, but it does signal possible easing for longer-term rates over the next week. So I do think that this figure on Thursday still holds a lot of relevance and potential volatility for the commodity market and therefore the Aussie dollar. So unemployment came at 230. I don't think so. Why have you changed? I mean, I think I know why that's happened. No. Um, yeah, so commodities did, particularly copper, did strengthen a little bit on the back of the Chinese news, and we can see the index also rallied. But we can see also that gold and oil up a little bit, but gold's still stuck in this little range. Excuse me, $30 range. Natural gas just going sideways, and Aussie dollar itself which along with the Canadian currency, the key commodity currencies, um, did strengthen but failed off that 68 level. So where to now? With a weaker US dollar, everybody's talking about how the US dollar got slammed. Well, it didn't really. It was down, yeah, but it closed at yesterday's low. It's not a huge sell-off. And it found support. I've got a support line there for some reason. It's found support there. So you can see why I've got that support line. Effectively 103 figure in an uptrend, right? So I'd be just looking at this as maybe an opportunity to get long the US dollar if you're prepared to take on what the Fed are going to be doing. Right, so against the Aussie dollar, I'd faded against 68. I think that's a reasonable trade. There'd be a lot of sellers at 68, so you could have your stop loss protected above there. Euro dollar, selling it around here, around the 108 figure, which it's trying to get through. I'll just move that to 108. You can see that the market loves a round number, right? So 108, providing that resistance for euro dollar, and potentially, I'd be looking to fade it off that. The cable is the only one I probably wouldn't sell against the US dollar because of previous mention. They're starting to show some good data. Yeah, so it's a very tricky week because you've got a lot of data and things can change very quickly with the news coming out. You've got if you're wanting to sell the Aussie, well, you've got Aussie unemployment. If you're wanting to sell the euro, well, you've got the ECB also on Thursday. Also against the Aussie, you've got the Chinese data. So there's a lot of risk in taking on trading the US. Maybe trading just the dollar index might be the key, or dollar yen. We haven't had a look at that one yet, as it's clearly weaker, but still stuck in that sort of. You look at the 4 hours, been in this kind of range for a couple of weeks now. Might be tricky too. So, as always, guys, trade accordingly. There's still a lot of volatility to come this week.